Hi, it's Nero here from Investment Rise, and today I want to talk about two new factors that are set to drive property prices even higher across the country. Now, it's no secret that we are in the midst of a property boom, and the only question then is, how much more can prices rise? In my last episode, I spoke about what many of the major lenders think, with almost all major lenders expecting double-digit growth this year, and some of them even expecting double-digit growth next year, and price growth to continue for some time yet. Now, of course, you could be a little skeptical. I wouldn't blame you, because after all, some of these lenders also came out and predicted a few months earlier that prices were going to drop through the floor. And of course, that was horribly, horribly wrong. All right. So instead of them focusing on the banks, let's check this out from the RBA, or rather some smarter individuals than me, way smarter than me, took the RBA pricing model, in other words, what the RBA uses to predict property prices. And remember, the RBA is very, very conservative. And what they found was that according to the RBA model, house prices could rise by 25% by the end of 2023. Now, that's a significant, significant increase. Right? And the typical argument for why are prices set to rise is because, oh, look, interest rates are low. That means that property is more affordable, loans are more affordable, it increases buying power. That's the age-old argument. But the question is this: if interest rates are low and prices are more affordable, that makes sense. But the question is, who's buying? I mean, where is all this demand coming from? Because interest rates can be low, but if there isn't excess demand over supply, then prices just won't rise. And we know at the moment that demand is through the roof and there are some massive supply shortages, but we've got no migration coming into the country, right? And sure, we know that some people are moving, say, out of the bigger cities, Sydney and Melbourne, to either regional areas or, of course, up to Brisbane. But the question is, though, is that enough demand to keep prices rising? All right, and that's what I really want to address right now. And so if we look at the following chart from ANZ back in 2016, it paints quite a startling picture. Because as you can see from this graph from ANZ's research, back in 2016, so 5 years ago, there was a shortage of 250,000 dwellings across the country at that time. That's 5 years ago. All right. But then what happened shortly afterwards? Well, you might remember then 2017 happened, and that's when we had the biggest drop in property prices, especially across Sydney and Melbourne, and many of the other capital cities didn't do so well either. But why did that happen? Well, check out this graph from Westpac. So this is the Westpac MI leading index, and each big bank has their own, so pick any bank that you want to. But what this graph shows is that from about the middle of 2017, demand for loans started to decrease. Now, we know why that is, because APRA, who's in charge of essentially all the banks, pretty much told the banks that they need to curb lending, make it harder for people to borrow, because at that time, back in 2017, property prices were at that time rising quite rapidly. Okay, but then we got to 2019 and APRA realized, oops, we've overstepped the mark, we've gone too hard, we need to backtrack, we need to let banks re-lend so that we can stimulate the housing market. But then 2020, COVID hit. And everyone sort of panicked, a lot of people panicked, and the real estate sales transactions plummeted, which meant obviously, there was hardly anyone borrowing. And as this graph shows you, you can see that, demand for loans was at record lows, almost as low as it was back in the GFC. But then what's happened? Well, since COVID, interest rates, as we know, have been dropped to record lows. Lending criteria has eased, so it's easier now to get a loan than it almost has been in at least the last 5 years. The government has been throwing all kinds of stimulus and money at people to buy property. And so what we've got is we have had this excess demand building up from 2016, because as you saw earlier on, ANZ said there was a shortage of 250,000 houses. So we had all these people wanting to buy property, but they just couldn't because the lending criteria then got very, very strict. So this demand has been building and building and building. And then once the floodgates opened in terms of lending being allowed and people were allowed to borrow again, well, you've seen what happened. All that demand has come in, and the shortage that hasn't been highlighted, even though it's been there for many years, has become very, very obvious. And now the banks are saying that if we don't build houses, build more properties, build more houses, then prices are going to rise even further. But the biggest stumbling block to that are local councils. Right? Councils trying to approve new developments and whatnot. That is a very slow and red tape filled process. So until local councils can kind of ease up their restrictions and make it easier for more supply to be released, we're going to keep having these issues, because it's very clear that the demand is really for houses as opposed to the apartment market, which is still suffering in many cities, especially in Melbourne and Brisbane. Okay, so if we understand that there's all this demand coming up, and even though a lot of the incentives have gone away, right, the demand is still there. I'm still hearing from people almost every day saying, I need to save up an extra 10 grand or 20 grand so I can get into property, whether it's their first home or whether it's their next investment property, right? Because prices are rising and you don't want to miss out on that. But here's what makes this property boom even more exciting for you, especially if you're an investor. And it's a second factor really set to drive prices up. As I said, we know there's demand. We know there's low interest rates. But what we're seeing right now is that rents are rising. In fact, according to CoreLogic, in the last quarter, rents rose on average across the country by 3.2%. And if you go back and look at the last 12 months, rents rose on average by 3.9%. And I expect those rents are going to keep rising for some time yet. Now, of course, if you're looking at Sydney or Melbourne, the rents haven't risen anywhere near that much. In fact, in Melbourne, they've dropped on average. Sydney, some parts have risen, some have still fallen. So what does that tell you? Well, that tells you that there are certainly places outside of Sydney or Melbourne where rents have risen by even more than 3.9%, right? Because 3.9% is the average annual rental increase across the country. But when you consider the fact that rents are now increasing, making investing in property more affordable today than it's ever been, and that might sound ridiculous when you look at the fact that prices have actually never been higher. But when you consider that interest rates have never been lower, rents are on the increase, I would say that buying an investment property has actually never been more affordable for people. And so what's that going to do? Well, that's going to also increase prices, because as rental yields increase and people can see, and investors can see, they can get better returns on property, especially in the right areas, they're going to jump in as well, increasing the investor demand, which has been very low to date, but is showing already signs of increasing. I think with the increase in rents and the fact that there's still all this pent-up demand, property prices still have a lot more to rise. And for you as an investor, it has never ever been a better opportunity to get a property in a growing market where the rents are rising and potentially even covering the mortgage and giving you some positive cash flow in addition to the capital growth. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.